you can see that we've had enormous growth in the ETF industry over the last couple of decades. 2024 in particular was a huge year. We had over 700 new ETFs that were launched, which was more than 150 above the previous record. And most of those were active ETFs this year, 571, which was 46% growth over the previous year. There were 161 new index funds, which was up about 20% over the preceding year. So this growth in ETFs comes from a number of reasons, which we're going to talk about. But the demand for ETFs is resulting in these record launches that we're seeing. We had a record inflows last year of $1.1 trillion, which again exceeds the record that was previously set in 2021. And Danny's going to provide a little more color on what's happened to ETFs over the last few years.
Great, Tom. And look, you started laying the foundation there. 1.1 trillion in motion last year. So look, it's been exciting to see how the industry has evolved over time. And here at BlackRock, through our iShares ETFs, we're really proud of the innovation that we've driven to really offer convenient access, new ways of investing. And I think this chart that you see here on this slide really speaks to this and how the ETF industry has been a source of innovation. And here the iShares platform with some key product milestones happening over the last few decades. I just wanted to start with a quick back to the future review because I think it helps illustrate how the market got to its current state. If you went back a couple decades, it was all about how does one access indexing? And that has evolved. Tom, you just mentioned a record number of active launches last year, but really that was the foundation going back a few decades. And you've seen innovation and access occur throughout. For example, in 2002, iShares launched the first bond ETF, really taking an asset class that trades over the counter, doesn't trade as efficiently, and putting it on exchange, making it easier and less costly to trade with greater transparency. 2003, we launched first emerging markets ETFs. Fast forward to 2010, we launched the first term maturity bond ETFs. We'll double click on that a little bit later, but suffice it to say, how do you complement what one expects from a bonds, but do something in a diversified structure? And we'll talk about that. And fast forward to just a couple years ago, in 2022, we launched the first buy right ETF, bond buy right ETF. Just a different way to access markets to gain enhanced income opportunities. Last year, we launched our spot Bitcoin ETF, which was the first ETF to gather $1 billion in assets in just 4 days. So speaking about the efficiency of the ETF structure to a newer asset class. So look, ETFs have become mainstream. They've become the structure of choice for many. And if we move to the next slide, we can see how ETFs have really captured market share within the overall fund industry. So 10 years ago, ETFs made up about just about 2% of total open-end funds. That's by AUM, which includes both mutual funds and ETFs, but now makes up over a third, about 35% of the market. And while mutual fund AUM has continued to grow, a lot of that is due to the strong market performance we've seen. When you look at flows, it tells a slightly different story. You've seen mutual funds seeing outflows of nearly 500 billion over the past year. And as the industry has evolved, so has the way that investors have utilized ETFs. As I mentioned, it was initially about pure index tracking vehicles, but actively managed ETFs have gained in popularity as more investors look to the ETF structure due to the sort of efficiencies that we'll talk about. The industry saw an explosion of active ETFs following the ETF rule in 2019. Today, there are over 1,700 active ETFs representing about 800 billion in assets in the US here. ETF use cases are evolving, and it's clear that our advisors are now blending both index and active strategies in their portfolio. If you go back just a few decades, it was like a cage match. Are you index? Are you active? And I think more and more it's becoming clear that financial professionals are blending both index and active strategies. When you look at total US fund AUM today, so when you include ETFs and mutual funds, about 47% is actively managed versus 53% tracking an index. Let's just call that a wash and say 50-50, blending index and active. At BlackRock, we expect to see active ETFs to see quite an increase. We're predicting about a fourfold increase to about 4 trillion in AUM by 2030 as more and more active managers and active strategies find their home in the ETF structure.